Section 1. Diversification, your portfolio's safety net. Don't put all your eggs in one basket. You've heard it a million times, right? Well, there's a reason for that. Diversification is the cornerstone of any solid investment strategy. When you diversify, you spread your risk across different asset classes. Think stocks, bonds, real estate, and commodities. Each of these reacts differently to market forces. What does this mean for you? It means that if one area takes a hit, the others can cushion the blow. This helps protect your hard-earned money from major losses. Remember, diversification is your safety net in the investing world. It's about mitigating risk and ensuring your portfolio's long-term health. Section 2. Cash is king, seizing market opportunities. Listen up. Having cash on hand isn't just about playing it safe. It's about being ready to pounce when opportunity knocks. Market corrections happen, and they can be scary, but they also create incredible buying opportunities for savvy investors. Think of it like this. When the market dips, prices drop. This means you can snag those valuable stocks at a discount, but you need cash to do that. Keeping a portion of your portfolio liquid gives you the flexibility to capitalize on these dips and come out ahead. Remember, cash is king, especially when others are panicking. Section 3. NVIDIA, the undisputed champion of AI. NVIDIA. This company is a beast in the tech world, and there's no denying it. They're dominating the AI landscape, and their chips are the brains behind everything from gaming PCs to self-driving cars. What does this mean for investors? It means NVIDIA is a growth machine. Their revenue is skyrocketing, and their future looks incredibly bright. If you're looking for a tech stock with serious potential, NVIDIA deserves a spot on your watch list. But remember, every investment comes with risks. Do your research, understand the company, and make sure it aligns with your investment goals. Section 4. Retail revelations. Nordstrom, ABF Freight, Foot Locker, and PVH earnings insights. Let's dive into the world of retail earnings and see what's shaking. This quarter has been particularly interesting with many ups and downs. We've got 4 companies on the radar: Nordstrom, ABF Freight, Foot Locker, and PVH. Each of these players gives us a glimpse into the health of the consumer and the broader economy. Nordstrom, the luxury retailer, is facing challenges as high-end consumers tighten their belts. With inflation and economic uncertainty, even affluent shoppers are becoming more cautious. Their recent earnings reports will reveal just how much this is impacting their bottom line. Analysts are keenly watching their performance metrics. ABF Freight, the trucking giant, is a bellwether for the economy. The trucking industry often reflects broader economic trends. Their performance is often seen as a gauge of overall economic activity. A slowdown or uptick in their operations can signal shifts in economic momentum. Keep a close eye on their earnings to see how supply chains and freight volumes are holding up. This will provide insights into the current state of logistics and transportation sectors. Section 5. The GLP-1 effect, a seismic shift in food and beverage. Hold on to your hats, folks, because the weight loss drug market is about to explode. GLP-1 drugs are revolutionizing how we approach obesity, and the implications for the food and beverage industry are massive. Think about it. If people are losing weight and keeping it off, their eating habits are going to change dramatically. This means less demand for sugary drinks, processed foods, and calorie-dense snacks. Companies like Coca-Cola, PepsiCo, and Kraft Heinz are already feeling the heat. They're scrambling to adapt their product lines and marketing strategies to stay relevant in this rapidly evolving landscape. Section 6. Nordstrom, navigating the luxury retail landscape. Nordstrom is a high-end department store known for its designer brands and exceptional customer service. However, even luxury retailers are feeling the pinch of inflation and economic uncertainty. Consumers are becoming more price-conscious, even when it comes to luxury goods. This means Nordstrom needs to find ways to appeal to value-seeking shoppers without alienating its core customer base. Keep an eye on their online sales figures and their efforts to attract younger, more digitally savvy shoppers. The luxury market is evolving, and Nordstrom needs to evolve with it. Section 7. ABF Freight, delivering value in a changing economy. ABF Freight is a major player in the less-than-truckload, or LTL, shipping industry. They transport goods for businesses of all sizes, and their performance is closely tied to the overall health of the economy. When times are good, businesses ship more products, and ABF freight benefits from increased volumes. However, when the economy slows, shipping volumes tend to decline. Pay close attention to their earnings reports for insights into freight demand, pricing power, and the company's outlook for the coming quarters. ABF Freight's performance can tell us a lot about the direction of the economy. Section 8. Foot Locker. Stepping up to the challenges in athletic footwear. Foot Locker, the athletic footwear and apparel retailer, is facing a rapidly changing retail landscape. The rise of online shopping and the increasing dominance of brands like Nike and Adidas are putting pressure on traditional retailers. Foot Locker needs to find ways to differentiate itself and offer a compelling reason for shoppers to choose them over the competition. This could involve exclusive product collaborations, enhanced in-store experiences, or a more robust online presence. Watch their earnings reports closely for signs of progress in these areas. The athletic footwear market is competitive, and Foot Locker needs to stay ahead of the game. Section 9. PVH powering forward in the apparel industry. PVH Corporation, the powerhouse behind brands like Calvin Klein and Tommy Hilfiger, is a global leader in the apparel industry. They've been navigating the choppy waters of changing consumer preferences, supply chain disruptions, and geopolitical uncertainty. PVH's success hinges on its ability to stay ahead of fashion trends, maintain strong brand recognition, and optimize its global supply chain. Their earnings reports will provide insights into these key areas. Pay attention to their international sales figures, as PVH generates a significant portion of its revenue from overseas markets. The apparel industry is constantly evolving, and PVH's ability to adapt will determine its future success. Section 10. GLP-1 and the future of food, a paradigm shift. The rise of GLP-1 weight loss drugs is poised to disrupt the food and beverage industry in unprecedented ways. These medications, originally designed to help individuals manage their weight, are now becoming a significant factor in how people approach their dietary habits and overall health. As these drugs gain popularity and become more widely accessible, their impact on consumer behavior will be profound. Consumers are increasingly prioritizing health and wellness, leading to a shift in purchasing patterns. This trend is not just a fleeting fad, but a fundamental change in how people view food and nutrition. Companies that rely heavily on sugary drinks, processed foods, and high-calorie snacks will need to adapt quickly or risk being left behind. The demand for healthier options is growing, and businesses must innovate to meet these new consumer expectations. Failure to do so could result in significant financial losses and a decline in market share. We're already seeing some companies invest in healthier alternatives and reformulate their products to reduce sugar and fat content. This proactive approach not only caters to the evolving consumer preferences, but also positions these companies as leaders in the health-conscious market. This is just the beginning of a major shift in the food and beverage landscape. The market is evolving, and those who can anticipate and respond to these changes will thrive. It's an exciting time for innovation and growth in the industry. Keep a close eye on how companies are responding to this trend, as it will have long-term implications for their growth prospects. Investors and stakeholders should monitor these developments closely, as the companies that adapt successfully will likely see substantial rewards in the future. Section 11. Cramer's Playbook, Strategies for Investment Success. Now let's talk about putting these insights into action. It's one thing to know the theory, but another to apply it effectively. Investing doesn't have to be complicated, but it does require a sound strategy and the right tools. With the right approach, you can navigate the complexities of the market with confidence. First and foremost, remember the power of diversification. This means spreading your investments across various asset classes to reduce risk. Spread your bets across different asset classes to mitigate risk and protect your portfolio. This way, if one investment underperforms, others can help balance the impact. Secondly, keep some cash on hand. Cash reserves are crucial for taking advantage of market opportunities. Market corrections are inevitable, and having cash allows you to capitalize on buying opportunities when others are panicking. This can be a game changer in your investment strategy. To stay informed, utilize resources like CNBC, The Wall Street Journal, and financial websites like Yahoo Finance and Bloomberg. Staying updated with the latest news and trends is essential. These platforms provide valuable market data, analysis, and expert opinions to guide your investment decisions. They offer insights that can help you make informed choices. Remember, investing is a marathon, not a sprint. It's about long-term growth and staying the course. Stay informed, be patient, and don't be afraid to adapt your strategy as market conditions change. Flexibility is key to navigating the financial landscape, and always do your own research. Never rely solely on others' advice. Your due diligence is your best defense against market volatility.